Welcome to another daily recap. Today is Tuesday, March 26th. It's a few minutes after 9 o'clock. The market opens pretty soon, less than 30 minutes. So after the close yesterday, they've climbed up in the pre-market. A little bit of volatility, some movement in the pre-market. They got above, or currently are above 521. And honestly, a lot of the levels are relatively close together here. And if they fall, they could fall fast. I'm not saying they will. They could continue to grind higher like they've been doing or go sideways. But in any case, I'm going to treat every single one of these levels with reduced position sizes, like maybe take two or to scale in two contracts at each level. If the spiders hit them, I'm sure they will because of where they're at now. And where they open in a few minutes could be quite a bit different, but that's kind of where they're at currently. And we will analyze all the trades taken in the E-minis after the market closes this afternoon. Now that the market is closed, here is the entire day where you can see how the SPI reacted to the levels. I believe there are a few learning opportunities in what happened today. So let's dig in a little deeper. First, the rules of the trading strategy I've developed dictate certain things. They tell you what to do and what not to do depending on certain parameters that present themselves in real time. So one of the rules is related to the time of day to enter trades. Generally, the rule is to not enter trades before 9:45 a.m. or after 3:30 p.m. There are some exceptions to this. But today, entering the first trade after 9:45 a.m. set this trade up for success. This particular level at 521.12 at this time in the morning it's not necessarily the best example to show how often times after the first 10 to 15 minutes of the trading session, the SPY tends to settle in and kind of pick a direction. Usually that's the case, and entering trades after a certain time once the initial frenzy has subsided a bit is typically the best approach. You'll notice that today there wasn't a lot of conviction either way. In the morning, they just hugged this level here for about 3 hours. Volume was very low during this time. But the takeaway is that this first trade worked in part because of where price was after 9:45 a.m. After that candle closed. The trade was a long position taken right at the level, and it was entered right after 9:45 a.m. And about 30 minutes later, they handed over the base hit. So we'll take a look at this trade as it played out in real time in a moment. The second trade, though, is what I want you to really look at, was when the spiders hit 520.46. So this trade was by the book and easy. The level worked as designed, and this is a good place to talk about another rule, the application of a 5-cent buffer that is applied to the level depending on how price is coming into the level. You'll see that for this 520.46 level, the spiders got within 3 pennies of triggering the trade. That is, if the activation trigger was left at the exact calculated level. But you've seen this many times by now. I make sure that the trade is triggered when the SPY gets to a 5-cent buffer of the actual level. I'll make those adjustments now so you can see. In this case, a trade taken here would have worked wonderfully. Out of the money for just a few seconds before price found the support needed to push higher and hand over a base hit. By the way, you will not see a recording of this particular trade in tonight's video because I was at the office and in back-to-back meetings during this time, not at my trading computer. But for the purposes of showing you all the trades at every level, I'm pointing this one out before we get to the live recording of the first trade. But let's take a look at these other levels that were hit. Spiders hit all these during the last 30 minutes or so of the regular session. So look at this 3:30 p.m. candle. This is when they started to fall, started to drop right here. The candle closed right as the spiders are falling down into this 519.82. Yes, this level has been adjusted also already with a 5-cent buffer. So let's say you had these levels for the day, but you didn't have the rules. Perhaps you would have wanted to jump in a long trade here at this calculated level of 519.77. It would have been on the long side. You would have bought here, bought ES contracts. And you can see now after the fact that selling pressure was at this point getting pretty strong for a trade like that to work out. Price met some support at this level, but they kept pushing down. And you would have bought again at this next level. Without a rule to follow, you probably would have. And then where would you be now? You'd be long on some contracts, probably maybe a lot of contracts, as price is falling even farther and time is getting near the closing bell. And so they get down to this next level of 518.47. And do you buy again with only 3 minutes left on the clock? And how would it feel being out of the money on multiple contracts this late in the day? So if you're an intraday trader like me, being in an active trade that is that far out of the money near the end of the trading session is not a scenario I want to be in. So speaking for myself, at least, that would have not felt good, seeing all that red and wondering if I would need to close out the trade at a substantial loss before the closing bell. But guess what? None of this was an issue today because you're not going to find me entering any E-mini trades after 3:30 p.m. Simple as that. So all three of these levels that were hit in the spiders on their way down this little fall here in the afternoon were out of consideration for any trades, according to the rules. They were all hit after 3:30 p.m. So today was a good example here of how often there is increased volume and volatility during the last 30 minutes or so of the regular trading session. So trading at these levels becomes a different ballgame. Even on just a normal day, today was a little abnormal. Volume picked up tremendously here, but the levels just even on a normal day typically aren't as strong enough to provide enough support and resistance for the reaction that you need to pull base hits. So that being said, there are some things to look for that could give you different reasons for where you would expect to see more substantial support or resistance toward the end of the day. And those things are taught in the E-mini trading course, which is coming soon to a computer near you. And one last thing I want to point out before we go to the live trade is that, did you notice the destination of the spiders with this afternoon stumble? It was 518.50, at least that area. Remember that level from the weekly chart that we've looked at a few times now? Still an important level in relation to where the week closes. And I don't think it's a coincidence that price was pushed down, 22 points or so within 30 minutes to this exact area, right around 518.50 before the bulls staged the battle and defended it. And you know what? I'll turn on the post-market data. That should give you a better visual. 24 hours. So a little better visual of this battle that was fought down here right after the bears pushed price down to this point right here. And 518.50 is right here, right above one of our levels for today. So can you visualize the battle that was going on down here when price got to this important level? So I certainly would not want to be in an active trade with this kind of whipsaw action going on. And like I mentioned earlier, volume picked up a ton during the last 20 or 30 minutes while this is going on. So could this be the first scrimmage of the upcoming battles that we're likely to see? Remains to be seen, since we have 3 more trading days left this week, but you could make the case that this battle line was already drawn down here at 518.50, and now that they're back to this level, the fight will likely intensify. But I guess that's enough banter here. Let's look at the live trade from the morning so we can wrap up tonight's recap video. And so thanks for letting me point out a few things to you. Hope you were able to benefit from some of this information. Before I start playing this recording, I just want to point out that the trade is entered very quickly right after 9:45 a.m. It's a limit order put on the E-mini chart over here, pretty much right at the level, because the spiders were hanging out right around and above that calculated level when the window of opportunity opened up. So here we go. Start the video. So once the trade was entered, you'll see limit order put there. It's pretty quick. So when it was entered, the profit objective on the E-mini chart is plotted 4 ES points. So with 2 ES contracts, that's $400. The reference levels over on the SPY chart, red and the green lines, are for the base hit and the fumble threshold areas. Just for my reference, because I like to keep an eye on how they come into these levels. Obviously looking for the 40 cents or 4 points, and they did hand that over at about 10 minutes or so, 8 minutes or so after 10 o'clock. I'll scrub ahead. 10, there's 10:07, I think it's around 10:08, here we go. And that base hit was scored, so that level is satisfied for the rest of the day. No more trades at that level, even if the spiders hit it again during the day. That's according to the rules of the strategy. And I'll scrub ahead here just to the point where I stopped recording and went into the office. There's no more price action, or no more action in general for me for the day. We already discussed the entire day earlier with that post-market analysis. So nothing more to see here. So we'll just take a quick look at the log to bring this full circle. Here's our 2 base hits recorded, 8 ES points added to the log. Not a bad day, especially since we knew how to stay out of trouble on those levels that were hit toward the end of the trading session. And for those of you who had these levels this morning before the market opened, I hope you were able to make money, assuming you're actively trading these levels at this point. Thanks for watching. Be sure to check out the Ticks&Trades website if you're interested. It is now live. There is some information on the site that you might find helpful. Stay tuned for the trading course and the daily level subscription, which is coming soon. Thanks and have a great day.